All right, welcome everyone. Today is February 5th. I hope everyone's having a relaxing weekend. So, yeah, this upcoming week, not too much happening in terms of economic data. We do have more earnings coming up. Chipotle Tuesday, Uber from Disney, Robinhood, CVS on Wednesday, PayPal, Cloudflare, and Lyft on Thursday. A couple Fed speakers, Tuesday, Wednesday, and Friday as well. But yeah, the market did start to show some signs of weakness on Friday, right? So one thing that I would look for this week is, can any of the stock that looked strong last week get back to the highs this week? And it would need to happen, I would say Monday, Tuesday, right? And if they can get back there and hold, then we could start to see the bottom form very quickly, and then we'll see the next move higher. But if we start to see lower highs start to print, right, especially with stocks that looked very strong last week, then we could start to see some consolidation, right? I don't know if we're going to see a sell-off, but the risk reward might start to shift back towards the downside. But it's a little too early to tell right now, but the first signs of weakness started to show on Friday. Just be aware of that. Look for the lower highs this week if the market does start to dip, and then yeah, go from there. So there's many different ways to play this week, like trade options this week, right? You either, if you have a smaller account and you're not able to time the downside, then it may be best to just wait for the market to bottom and then try to look for calls when the market bottoms. If you are quick, you are pretty savvy with trading, then there's going to be opportunities both ways, right? You just have to understand when to get in and when to get out when you're trading calls, right? Because we could see those lower highs, but it doesn't mean that there won't be opportunity to make quicker trades, right? For me, that's not really how I trade. So most likely I'll just be waiting for an actual trend, but just be aware of that, right? Every trader is different, right? Every market each week is different. So if you're not comfortable trading this type of market, if it does start to shift, just be patient, right? Wait for the edge start to lean back in your favor, right? Give me a second here. I'm going to share my screen and let's go over the charts. Okay, so here's Apple, right? Gap down a bit after earnings, but the dip got bought up. So that's pretty bullish. Apple has held up pretty well, right? Since the market has been dipping for over a year now. So, I would say the thing to look for this week on Apple is, does it hold 153, right? And if it can hold 153 while the market's selling off, then it's possible to see 157 again by maybe Wednesday, right? And if Apple can get back to 157, it's got a shot to go to 162, 165. The calls can work above 157. Watch to see if it dips, holds 153. If it can't hold 153, then higher chance it could test 150 again. So puts could work under 153 as a day trade. Puts can work under 150 for a move down to 145. Upside here, I would just treat everything as a quicker day trade until it can close back to 157. All right, here's AMD. So that the candle on Friday, not great, right? Tested that 88 twice, Thursday and Friday, couldn't hold on Friday after trying to move higher during the day. So right now, it could dip towards 85. It's not far off point, but even for the downside here, I don't see anything yet, right? It had a positive reaction to earnings, still held up pretty well. So if the market reverses back to the upside above 88, calls can work. Downside, I would just watch to see where it bottoms. Maybe it goes to 81, but I don't think it'll be a straight line down there. All right, so here's Amazon, closed at 103.39, had a negative reaction to earnings, right? I think it touched 117 quickly after hours on Thursday, and then reversed right back lower leading into Friday. So this one might be out of play for a couple weeks. Let's see where it bottoms. Ideally, we'd like to see 101 hold. So if it back tests 101, hold there, market starts to stabilize, bottom out, calls could work up, on a 101 test and it holds. If the market does start to sell off, then under 101 puts can work, right? It could go to 97. Upside here, don't see anything yet, right? Even if it pops up to 104, let's see, a reason why this would start to rip right back higher. So it might take a few weeks for this to we see better opportunity for the upside. All right, so Goldman Sachs kind of been in a range for a little while here, close to 369.95. So if banks start to sell off, it could go to 350 again, right? Watch to see if it prints a lower high in the daily here. Watch to see if it holds 369. If it can't, then 361's in play this week. The puts could work as a day trade under 369. Upside, I'd be more patient. I think not. Yeah, I don't see a trade here yet for the upside. Okay. All right. So here's Meta, kind of similar candle on Friday to AMD, right? 194 rejected twice, Thursday and Friday, close at 186. So this might try to pop up again. Like maybe this pops up to like 190 early this week, right? And I would still consider puts there, right? If it pops to 190 and just starts to slow down, starts to look weak again, puts could work in that range. Puts could work under 185, right? Let's just say it pops up to 190, reverses back lower, and then breaks under 185, puts could work. Upside, pretty straightforward, just watch 194, right? If it gets back to there and go to 200 and possibly up to 213, but just be aware, right? It's moved from 87 up to 194, 195 in the past few months. So might start to see a little bit of a dip here if it can't hold 185, especially 176 as well. All right, here's Microsoft, right? Similar candle, AMD and Meta on Friday, goes at 258.35. So I would say just watch 255 this week for the downside, right? Tech starts to sell off. That's going to be the entry for puts. Could go to 250, maybe down to 246 if we really start to see the market dip. Right, and then upside, pretty straightforward too. 263 is going to be the spot. If it gets back to there, tech starts to bottom. Right, SPX has to curl back up towards 4,200. EQQ's near 309 to 313 range, then this could go to 270, maybe 276. But downside, right, watch 255. Right, watch how other tech stocks are acting. Right, watch EQQ, and yeah, go from there. Okay, so Netflix caught a bit of this on Friday, close to 365.90. So could see some chop here, right? Under 360, maybe it dips to 351, but still looks pretty strong. So, above 372, you still got some resistance at 385, but if it closes to 385, it can go to 400, maybe up to 412. Right, downside here is average, I would say, even if it fails to 360. Under 351, I think you could see it sell off to 336, 329 though. So 351 would be a bigger level to break. Yeah, 351. Okay, so Nvidia close to 211 on Friday. So move near 220 on Thursday, higher low on Friday, it fell to 215. So if it breaks 208 this week, it may not break on the first try, but if it starts to fail there, it could go to 200 again, right? So watch to see if it pops up to 215, fails to hold, puts can work there. Above 220, calls can work, right? Under 208, puts can work. Under 200, puts can work again. Fails to 189, could go to 171, right? So yeah, watch to see if it prints that lower high in the daily, right? I think it can pop at 215, and could be a fake out at that level. All right, here's Snow, close to 163.29. So looks like this could go to 146 again. Can't hold near 164 at the open or in the next 2 days, Monday, Tuesday. So yeah, but either way, I would treat both sides as just quicker day trades of this one. The premiums are a little funky on Snow. So yeah, not a buy and hold, I would say, for weeklies. Okay, so here's Tesla. Caught a bit of this one last week as well, close to 189.98. So still looks okay, right? Not far off the 200, but for now, I would say just in a range, right? The price action could be a little bit more tricky, a little bit harder to time, right? If it gets through 200, it can go to 216, 224, right? Under 179, we're going to start to see a bit of a pullback. It go to 167 again. Between 179 and I would say 196, I would just treat as day trade, right? Take what you can, play off the levels, but
I don't think we're going to see the type of move, right? The type of trades we saw last week and the week before. I'm trying to play the upside on this one, but anything's possible, right? That's my opinion at the moment. All right, so QQQ weak candle on Friday, right? Close to 306.18. You got what, near 313? I'm sorry, no, 311 on Thursday. Lower high on Friday. Under 303 plus can work this week. All right, pops up to 309. Watch to see how it acts there, right? If it can pop up to 309 and base in that level, then it might set up for the next move higher, right? So, as of this moment, the candles on Friday, right, on SPX and QQQ, not great, but there are situations where it could just be a one-day pullback. That's also a possibility. We'll just have to see how the market acts on Monday, Tuesday, right? It doesn't mean we're just going to reverse right back lower. Be aware of that. Right, so if it fails at 303, should test 300, right? If it fails there, and go to 93. And then next time it closes to 315, it could go to 334. 334 is a big level for QQQ. SPX close at 4136. So, reverse lower on Friday, but still held 4100. That's going to be an important level to hold this week, right? If it can't hold there, it could go to 4020 again, maybe 4000. And then 4200 is going to be that level to break to go to 4325. So we'll see. Let's see if it holds 4132 early this week. If it can, then should test 4174 again, right? So you got 50-point upside before you hit hard resistance near 4200. All right, so yeah, we'll see. I mean, day one of a fallback after a pretty strong move Wednesday into Thursday. Even Tuesday into Thursday, I would say, for SPX. So yeah, we shall see. A couple questions from members. First question is first week in a very small account. First input on January 30th. So let's see. Looks like they bought NVIDIA 205 call and Tesla 190 call, had a false breakout. Being new, took losses on them on first day with 40% loss. These call worked well towards the end of the week. Any inputs and learning on how to decide if the trade will work later during the week? Okay, so the first thing you mentioned, you have a very small account and you took the first two alerts that I made last week, right? So you're asking, how do I know when to hold, or how do I decide if the trade's going to work later during the week? But the first thing that I would ask myself is, okay, I have a very small account, right? Most likely you're newer to trading, right? So the first thing I would ask you is, why are you taking the first two trades of the week on a very small account, right? So the risk management there isn't there, in my opinion, right? Both trades are calls, so they're betting the same direction. So in a very small account, you have to be more selective, right? And then the second thing is, you sold on the first day, 40% loss, right? So the way that I trade options now is, buy what you can afford to go to zero, especially with weekly options. So if you sell at a 40% loss, then buy 40% of what you would normally buy and allow the option to work. Meaning, be okay with it going to zero, because weekly options are volatile and you have to be okay with the bigger swings in how they move, right? And, once, number one, you're able to kind of be more selective and then understand how to manage your risk, then being able to see the trade work later in the week, you'll be able to see that more often versus, asking me, how do I know if this will work later in the week? For me, I mean, I don't know, right? I don't know if it's going to work later in the week. I don't know if it's going to work the same day, right? I'm kind of planning out my trades and I'm defining my risk before I enter the trade. So every outcome I'm ready for, right? Versus I don't know if it's going to work on Friday. I can't really tell you, right? If you buy NVIDIA 205 call, right? I can't tell you, just hold till Friday. It may work. Right? I don't have an answer to that. But the only thing I can tell you is, if you have a small account and you're taking the first two alerts in a week and you get blown out the first day of the trade, then, that's the wrong way to trade, right? Because one part of it tells me I don't think you understand why I took the trades or why you took the trades either. So be selective, right? Be aware what you're trading, why you're trading it, and then always be honest with yourself with the risk, right? If you get blown out the first day of the week and you have no more capital to trade the rest of the week, then that's not the right way to manage your account. So look into figuring that out first, and then you'll be able to hold the right trades for longer um, when you are trading the weekly options. All right, so that's where I would start. Next question. On Tuesday, you mentioned that there was a positive reaction to FOMC, AMD, and NVIDIA would be the first to react. How did you discern this? Okay, so first thing is AMD had a positive reaction to earnings, right? And AMD has been basing for a while without showing any real signs of a breakout. So once they got back through 71, that to me made AMD a more attractive trade, right? I started to look a little bit more closely towards AMD. And then the next thing is the previous Friday, right? Not last Friday, but the one before, NVIDIA had tested 200, right? So that was the first sign of, okay, this could start to break out, right? We have FOMC coming up next week. We have AMD earnings. We have other semiconductor, right, chip stock earnings as well. So the stars are kind of lining up with NVIDIA. Stars are lining up with AMD if the market can move higher. So, leading into Wednesday, right, the FOMC day, right, both stocks had some relative strength. And to me, it's a very straightforward type of trade to consider NVIDIA or AMD. And it doesn't have to be those two stocks, right? There are other stocks that had relative strength, but I'm not trying to reinvent the wheel and try to find some random stock, right? I'm gonna trade the stocks that I'm familiar with, stocks that I know the premiums very well, right? So keep the strategy simple, right? And just be simple with your ideas, right? It doesn't need to be a complicated reason to take a trade or to create a plan. It just needs to be very short, concise, and just objective. So yeah, that's pretty much the reasoning, which I don't think I think there will be going forward, there's going to be many different types of trades similar to this. It's basically a relative strength trade. So which stocks have relative strength leading into some type of economic event, right? So if a stock has relative strength to the upside, then I'm going to trade that when it comes when there's a positive reaction to something. And then you look at relative weakness. Okay, well, the market's starting to look weak like it did on Friday. Which stocks look relatively weak? Right. So if we do see a sell-off, then just focus on those stocks. And that's like, I would say one of the most fundamental ways to think about trading, right? Some people, I think they overcomplicate with indicators and this and that, and it makes you think too many different angles when to me it's very straightforward. It's as straightforward as it can be, right? And and another thing too is the thing with indicators, I was thinking about this over the weekend is I asked myself, why do so many people use indicators? Why do so many people rely on these things to make their trades? And one reason that I came up with was people like being told what to do, right? And an indicator can give you some type of signal of, okay, this moving average crosses this one, then you should take the trade. And if you take the trade and you lose on it, then you blame the indicator, right? So there's always a reason why you're not necessarily at fault of losing the trade. But if you don't use the indicators, right, and then you create your own plan based on price action, based on data that's in front of you, right? Kind of like when I'm talking about the NVIDIA and AMD, then the way I look at it is you're responsible for that loss if you lose. But if you're using 10 different indicators and you say, oh, well, the indicators didn't work, so what can I do, right? And in some sense, you don't learn from it. right? You kind of blame an external reason as to why you lost the trade, right? So I think that's why so many people, especially newer traders and amateur traders and people that don't really have any skin in the game, teach this and use this to kind of teach other people. To me, it's kind of like the blind leading the blind, right? And you guys see it day in and day out. I don't use any, right? I don't really look at anything other than what's happening, what's actually happening, right? The price action, the news, and just making simple plans. And I think that's the real way to trade. I mean, I'm sorry, there's many different ways, but the most simple way to trade is the way that I do it. So yeah, think about that. I think it's just kind of a random thought I had, but yeah, hopefully you guys found it somewhat helpful. All right, so yeah, that's it for this call. Not too much happening in terms of economic data. We just have some Fed speakers and more earnings this week. So yeah, we'll see what happens. Hope you guys have a good rest of your Sunday, and I will see everyone tomorrow morning. Thank you.